All right, welcome to today's live stream. It is Monday, April 29th, 2024. How are you? I'm Jaden Sterling, your host and founder of Sterling Stock Picker. Thanks so much for being here. Happy to have you here. Lots to cover today. Holy smokes. All right, let's get started. This article, Retailer London Drugs out of Canada here closes stores in Western Canada due to a cybersecurity incident. This actually came out Friday where they announced they were closing stores. This shows that they closed them on Sunday, but they said contact your pharmacist if you need any prescription. Just very interesting. I find this very, very interesting. I think this is going to be happening more and more to companies. They're going to have some type of cybersecurity event. You know, and as an investor, the best way to play that is looking at cybersecurity companies to invest in, right? So on next week's show, I'll have a few of cybersecurity stocks that are my favorite top picks, and I'll share them. But there's more and more to talk about today, and that is this Republic Bank first big bank seizure this year coming in 2024. But this is what I find interesting. So this is yahoofinance.com, one of the largest financial websites in the world. And as I scroll through here, I see nothing about this incident. This was reported Friday night. Today's Monday morning, and literally nothing is reported here about this. And this is a big deal. And I'm going to look into with you a little further of this, but you know, you saw me, I just refreshed my screen. This is Monday morning after a major bank seizure on Friday evening. And okay, there we go. Finally, where am I? I'm like more than at the bottom of the page here. Here's the timeline. Republic First becomes first casualty of U.S. bank crisis in 2024. Now, let's look into this. They sold it to Fulton Bank. And Fulton Bank, I just want to point this out. So here's Republic First Bank Corp. Top institutional holders. There's only 12 institutional holders. Shares held by institutions, a little over 1%. Obviously, there's been a lot of selling of this stock because at one point, I'm certain Republic was just like all the other financial companies where, you know, they would have had well over 50% of the shares held by institutions. So here are the top three that are left. You can see the stock is a penny. It's worthless. Philadelphia Trust Company, LVM Capital Management, Colorado Public Employee Retirement Association. Very sad that they were left what's called holding the bag. Only 36,000 shares, though. Thankfully, we don't know their cost basis. But when you look at this type of company, so the institutions, the big ones have bailed already. But let's look at who is buying them. Fulton Financial, and it wasn't even a buyout. It was like, here, take these assets. And number of holding institutions, shares held by 73.7%. Look at it's the biggies. BlackRock at 14.5, Vanguard at 12, Dimension Fund, State Street Capital at 5, State Street Corp. So we've got the biggest of the big holders here. BlackRock, oh, look at that, 26% and 26.5% of all the shares outstanding by these two, Vanguard and BlackRock. So how you need to play this is you need to basically get out of your bank stocks and know that there's going to be a consolidation happening in the marketplace. We're going to end up literally with 6 large banks, and it's going to be the holders, the largest shareholders of those banks are going to be BlackRock and Vanguard. So this is going to be very interesting how this plays out in terms of their ability to really make change in these financial institutions. So as we look at the top mutual fund holders, you don't see any BlackRock. This is normal. This is what I've shown you in the past. When BlackRock holds companies, they're not held in their mutual funds. They're held in their own portfolio. So there is a Vanguard Extended Market Index Fund, very small, only 2.41 million shares. But yet they own 12% of the float shares outstanding. They own 19.44 million. And then there's 2.41 as their largest holding in this fund. So same thing as BlackRock, Vanguard is holding these shares in their own portfolios. This is not, I mean, I've shown this to you over and over again. That's how this game is played. So what's going to happen is these financial banks are going to be literally, they're just going to be taken over by other financial institutions, because what's underperforming is their commercial assets, commercial loans that they have on the books. Commercial loans are only 3, 5, or 7-year loans. They're adjustable, so they're not like a personal mortgage. They're always coming due at higher and higher rates, depending on what rates are doing. In this environment, rates are going up and up. So as these loans come due, they're having to make sure that there's enough equity in the property, or else the holder of that loan is going to have to pony up more equity for that particular property or sell it at a fire sale. And that's exactly what's happening. There's these fire sales going on in these commercial properties that are incredible, like pennies on the dollar. And these institutions like BlackRock are able to come in, swoop them up for next to nothing. A commercial loan in the US is considered 5 units or above in an apartment building. You know, these aren't just office buildings and, commercial spaces. These are large apartment buildings. And so, like I say, anything 4 units or below is considered residential, 5 or above is commercial. So the same thing's happening there. In order for the landlord to keep up with that new payment coming due at a higher rate, they're either having to just let it go, let the property go, or let it go back to the bank, or if they can raise rates enough, like rents enough to cover their new expenses, then maybe that'll help the situation. I'm hearing about in the commercial space what they're calling junk fees, that the landlord is charging above the rental, and they're charging for extra fees for garbage, for cable. They're making all of their folks pay a certain monthly rate for cable. They can no longer do it independently. They have to do it through the apartment building. And this is even happening in affordable housing units, where they're charged upwards, if the rent is $750 a month, they're charged upwards of $300 or $400 a month in junk fees. So this is going to continue. It's not going to end well, I guarantee it. So how do you play this as an investor? Obviously, you make sure that you don't own bank stocks. If you were to own any bank stocks, it would be like, JP Morgan Chase is going to be the largest in the world. That'll be the dominant bank. They'll own everything. Maybe could be a potential safe haven if you're interested in bank stocks. But frankly, I've been talking about it for a year or two. Just liquidate them, get out of them. I've had someone ask me about Bank of America, and no, they're not well collateralized. Although May 1st, the Federal Reserve has come back and said we're no longer having any collateral restrictions on the balance sheet, where they were doing a holdback. prior to May 1st. They're saying, no, we're going to eliminate that. All the money you have on deposit, you get to lend out in order to help the banks. That was huge, because if they kept with that certain deposit on hold where they had to keep cash aside, most banks would have failed. Like, that just would have been the situation. They wouldn't have survived it. So I find that helpful, that, it actually does work in an investor favor to pull that back on these banks going forward. So yeah, just interesting to point out. The stock of the day or of the week is Dorian LPG. Really like this company. It's, it did have a bit of a drop early to late February. It did hit $33 a share. It's back up to 42 today. MFI sitting at 56. Great rate of return. Like, you're looking at a 9.57% yield on your money today at $42 a share. So take a look at that. That's my number one recommendation. Like I say, next week I will be back with looking at some cybersecurity stocks, as that could be an issue. This week is full earnings on, like, they're coming through this week in a big way. We've got AMD, Google announced last week. They were good. Tesla last week, they were great. Actually, they weren't good. Tesla's earnings were below what was expected, but the stock shot up. So there you go. What we're seeing now is anything that has been underperforming up until earnings announcements goes higher, or if a stock is overperforming, even though they're hitting their earnings target, the stock is getting taken down to its knees. Bit of a haircut there. So I think what we're seeing is there has to be a little more caution in this market as we go forward, and really looking at being very particular with where to invest your money. Again, staying out of the banks, looking into the cybersecurity companies. That's going to be, again, I'll do an analysis on that this week and report back to you on Monday. But that's what I'm seeing. So earnings this week. The key is companies just have to reach their targets, be on target with their earnings. And I think we're starting to see a little bit of a trend. A lot of companies reporting not as good as expected earnings for second quarter of 2024. That's a trend that we are seeing, probably here to stay, dare I say. But if we lower our expectations with second quarter, one of two things happens. We're either happily surprised that we did, and the market is as well, and it takes companies higher, or these companies do exactly what is expected and report lower earnings, as well as for the second and third quarter of the year. We're just going to have to see how this plays out, right? This is just one of those things where very important to see the result of what companies are posting. We knew companies can't continue, especially these stocks that have made higher highs during this market. Very difficult to continue that without some type of pullback. We're seeing that selectively in some of these stocks. And that's a healthy market. I think that's a good thing. It's not fun being a shareholder of those companies because you really feel the pinch and the volatility to the downside. But remember, we celebrate the volatility to the upside, but just as volatile as stocks are on the upside is as volatile as they can be on the downside as well. So the key in this market is to continue to do your due diligence and own shares of only the greatest companies in the world. Fortunately, a lot of them are domiciled in the United States. And transact business all over the world. So that's really key, to find these big companies that will continue to execute on their business plan and to show continued gain in the companies. Then eventually, regardless of what the stocks do or don't do, that will be reflected in the stock price, and investors will be rewarded for that. So now more than ever, just be really, really selective in the stocks that you buy. If you're wanting more guidance on what to buy and when to sell, let me know. We're hosting 2 new courses in May. One is for those who have 100,000 US or more in their portfolio, and the second is for $50,000 in your portfolio. And we meet on Tuesdays or Wednesdays. Reach out to me. We're filling up those classes fairly quickly, so let me know if you have an interest. Have a fantastic week, and I'll see you next week.